This is Horizon's Middle East and Africa. Our top stories this morning. Chinese tech stocks soar on AI optimism, rebounding after a sell-off. In contrast, Magnificent 7 tech stocks enter correction territory, dragged down by Tesla. Ukraine agrees with the US on a deal to jointly develop its natural resources, and this could ease tensions with President Trump and push his goal of a ceasefire with Russia. Plus, finance ministers and central bankers gather in South Africa for the G20. We're live in Cape Town for an exclusive interview with French Finance Minister Eric Lombard. It's just gone 8 a.m. Wednesday morning across the Emirates. It's 3 p.m. Wednesday afternoon here in Sydney. I'm Paul Allen, in for Jemana Lesetja. Let's take a look at how some of the assets that we track are going at the moment. We've got oil recovering after sliding to some of the weakest levels that we've seen so far this year. Crude's been down about 5% this month. Of course, the usual concerns dominating here, concerns over demand in China, also concerns over supply as well. Morgan Stanley, though, sees OPEC rolling over its production quotas at the next meeting. Take a look at Bitcoin too. It is also recovering a little bit, but it's now below that $90,000 handle. We do have Ethereum approaching lows that haven't been seen since December, and that's being closely watched. If Ethereum slips below those September levels, we could see further selling ahead for Bitcoin. Copper's an interesting one too. That is up quite a bit. Copper miners in China are up as well. This is after President Trump signed an executive order directing the Commerce Department to explore possible tariffs on copper imports, and that, of course, could put the price up for U.S. consumers. The U.S. does rely pretty heavily on imports, and a 36% of total demand, in fact, and China is the largest source of that imported copper into the U.S. So we're watching that very important industrial metal quite closely. Also watching closely the Magnificent 7. I mentioned that has now slipped into correction territory. Tesla is one of the main reasons for this. It's now down 25% since the start of last year. And as we mentioned yesterday, sales for Tesla in Europe down 45% in January on year. Also questions on the big spending that's going on among Mag 7 stocks on AI. The usual questions over how that's going to translate into profit. Of course, Nvidia earnings, which are due tomorrow, could turn things around. So we'll keep an eye very closely on news out of Nvidia tomorrow. Let's check in on how Asian markets are faring. Meanwhile, Avril Hong's in Singapore. Avril.
Yeah, Paul, we're seeing the region's benchmark managing slight gains amid the rally in Chinese tech, and this is helping to offset the drag from the chip names, particularly those in Japan, such as Tokyo Electron, as Trump kind of tightens the screws reportedly to restrict China's access to chips. So we're seeing the Hang Seng Tech, these gains put it within reach for the highs of the year. And in terms of the catalysts, today it's about DeepSeek reopening access after a 3-month suspension of its core programming interface. And there's the idea as well that there is enough AI optimism to go around, that regardless of what Nvidia earnings look like later today, Chinese tech stocks might continue to do well. It's also worth noting that we heard Xinhua saying the Chinese president spoke to officials in China, saying that even in the face of these domestic and global challenges, to kind of stay calm. So to some analysts, this suggests a measured approach to Trump's policies, whether you're talking about trade and investment that we've certainly been seeing ramped up in the past week, Paul.
All right, Avril Hong in Singapore, thank you. Well, Ukraine has agreed with the US on a deal to jointly develop its natural resources. This could ease tension with President Trump and advance his administration's goal of a ceasefire with Russia. Sources say Ukrainian President Volodymyr Zelensky is planning to travel to the US on Friday to seal the agreement with Trump. Well, Bloomberg senior reporter Henry Meyer joins us now with more. So, Henry, how close are we getting to a possible ceasefire in Ukraine?
I think this is a very important step. We've seen the tensions between the US and Ukraine got really bad with President Trump declaring that President Zelensky is a dictator. So if this agreement is indeed signed on Friday, what that will achieve is it allows the inclusion of Ukraine into this negotiating process, which President Trump has started with Russia. At the same time, I would caution that there are a lot of resistance from Russia in terms of an early ceasefire. You know, they are progressing on the battlefield, albeit in a very slow fashion, but they see the tide is on their side, and the longer that they have to continue to make gains, the better for them. So I think President Trump is still facing a lot of resistance from Putin in terms of getting him to agree to a ceasefire.
Yeah, and if a ceasefire is achieved, then the challenge is to make it stick. President Trump's already said that Putin's ready to accept European peacekeepers in Ukraine, but the Kremlin seems to be pushing back against that idea. How crucial is this issue?
It's absolutely crucial because, exactly as you say, Paul, I mean, you can agree on a ceasefire, but if it's not going to be respected, you're not going to be able to build the momentum towards a lasting settlement, which is the goal that President Trump has set. The problem about the peacekeepers is you need a robust peacekeeping force there, a force which does have the ability to enforce this agreement. France and the UK have indicated they're willing to participate. They're working on a proposal for a light deterrence force. I suspect that this issue could be resolved, but it would depend, of course, on Russia receiving something in return. So there are a lot of tough negotiations ahead.
All right, Henry Meyer, Bloomberg's senior reporter, thank you. Well, Hamas says it's reached an agreement with Egyptian officials for hundreds of Palestinian prisoners to be freed by Israel. The Associated Press is also reporting that Israeli and Hamas officials have agreed to exchange the bodies of dead hostages for the release of 600 Palestinian prisoners. Israel has delayed their release since Saturday to protest what it says is the cruel treatment of hostages during their release by Hamas. Well, let's bring in Stuart Livingstone-Wallace now, Bloomberg's executive editor for Middle East, North Africa and Russia. So, Stuart, does this mean the truce expiring on Sunday is going to be extended?
I mean, it's certainly more likely today than it was yesterday, I would say, but there's, again, no certainty at all that that will go ahead. I think most of the actors involved are certainly willing to give it more time. I mean, I think the reporting we showed out of Israel yesterday was that, yes, they're absolutely keen to extend this, potentially extend the first phase so that you can then have negotiations into this so-called second phase. But at the same time, what's happening on the ground is really, really important. They are amassing troops at that border with Gaza, making it very clear that they're in no mood to let this run on for months and months and months. They want a reasonably quick resolution. And that, as they have said for many weeks, they are prepared to return to war if they don't get exactly what they want. So, I mean, I think in terms of the backdrop to those negotiations kicking off in the next few days, all the actors seem to be engaged, but at the same time, clearly there is a really high risk here that you have a resumption of some sort of hostilities, and that's, I think, what most of the parties would like to avoid.
Yeah, things do seem very finely balanced at the moment. How likely is an extended ceasefire at this point?
I mean, I think, again, the willingness, certainly from the side of the Israelis, again, the Palestinians, the Egyptians, the Qataris, the Jordanians, I think most of them realise that there is a great deal more at stake, not least because you've had this change of administration in the US. And again, the narrative around the future of Gaza has changed, really rather significantly in terms of what the world's superpower thinks should happen. So the narrative to some extent is changing. As a consequence, I think the parties are changing to some extent their stance. And that is just going to make it tougher and tougher to get it done. But we have had a series of releases of hostages, both alive and dead. We've had the series of releases of Palestinian prisoners. All of that is a positive relative to the 15 months that preceded it. But nonetheless, things are reasonably precarious, I would say.
Well, in the meantime, Israel says it's carried out attacks on the southern outskirts of Damascus and Syria. What are the details of this?
I mean, again, a continuation of what we've seen over the last several weeks. So since the fall of Bashar al-Assad in Syria, Israel has made it very, very clear that it's not going to allow the weapons that he accumulated to fall into the hands of just about anyone. So you saw this absolutely enormous series of strikes on Syria several weeks ago that eliminated pretty much the entire Syrian navy, along with a whole bunch of missile sites, weapons storage sites, and so on and so forth. So there's much the same thing. And Israel has made it very clear that it's not going to allow the southern bit of Syria to be militarized. Now, what's unclear here, I think probably just about everyone, is who exactly is in control of southern Syria. It's a real mystery right now if anyone actually controls that balance of power. And so you should expect, I think, over the next several weeks, every time there is an opportunity for Israel to take out further weapon storage sites, missile sites, or anything along those lines, it will do that quite aggressively, again, thinking further forward. There isn't yet a stable government in Syria, and Israel, I think, is very aware that it needs to take out weapons and take out what it perceives as threats to its own people whenever it has the opportunity.
All right, Stuart Livingstone Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Thank you. Still to come, hear why Bank of America says the Fed's done cutting as President Trump moves ahead with his tariff threats. We'll have more on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. US consumer confidence fell this month by the most since August 2021 due to concerns about the broader economy. And the drop highlights the uncertainty the Trump administration's policies are creating in households, or for households. Joining us now is Savita Subramanian, head of US Equity and Quantitative Strategy at the Bank of America. Savita, thanks so much for joining us today. I just wonder how you view the performance of US assets, particularly stocks, versus their international peers so far this year. Do you see that reversing?
You know, it's been an interesting year, and I think what's happened is in both markets, both regionally and within the S&P 500, we've seen these sort of broadening trends in terms of not just mega cap tech outperforming. So I expect that broadening to continue. Even within the index, we think there are a lot of really attractive opportunities within the S&P 500 that may not be the Magnificent Seven that we've all been paying attention to. What I think is interesting is that, the bulk of S&P 500 companies are penciling in pretty positive, accelerating growth trends, and that was not the case last year or the year before. So I think the theme is not necessarily rest of world over US, but broadening trends outside of just mega cap tech.
I know you don't wish to comment directly on any specific stock or sector, but we do have to address the big one, which is the Nvidia earnings tomorrow, and that is the question of the day for
Indeed.
Bloomberg. Can US stocks rally without Nvidia driving?
I think they can. I mean, I think we've already seen that in fits and starts. So if you think about, the themes that are taking place right now, what's happening is actually quite bullish for the broader U.S. economy. The hyperscalers are accelerating in their CapEx spend. The fact that the cost curve has been bent a bit lower by DeepSeek is actually bullish in terms of unit volume demand. So I think the idea that we're just at a complete halt because of DeepSeek and this competitive threat is not necessarily the right interpretation. We would see this as, the advent of, again, competitive threats are to be expected within the tech sector, but this is something that is actually beneficial in terms of lowering the cost curve. We've done a lot of analysis looking at right now versus 99, 2000, which is, right around when I started in this industry. And there are similarities, but there are also very important differences. So I think, today what's taking place is very different from the tech bubble. We've got companies with real earnings, real cash flows, healthy balance sheets that are actually spawning an economic resurgence by spending on data centers, power, structure, kind of a mini manufacturing boom that's being created by these companies. So, one company's earnings alone, I don't think is the linchpin of success or failure of U.S. equities.
Well, in terms of the macro picture, we've seen yields slipping, gold's very strong. There seems to be a lot of uncertainty at the moment around inflation, particularly in the US.
Indeed.
The outlook there.
Yes.
Geopolitics as well. I mean, how's your risk appetite more broadly?
I think that where we are is a point of confusion, indeed, and the real scarce resource within broader markets are inexpensive, high-quality stocks. Because if you think about it, anything that's quality has gotten quite expensive. Defensives are much more expensive than cyclicals. So I think this is a real advantage at a stock selection level to look for inexpensive, higher quality areas that are likely to grow. One theme that we've been focused on that's quite bullish for U.S. equities in the U.S. is deregulation. This is something that isn't getting as much airtime as, tariff risk, et cetera. But the idea that the regulatory burden that U.S. companies and, across the world, we've seen regulatory shifts tighten. The idea of some of those unloosing is actually potentially bullish in terms of cost cutting as well as productivity and growth. I think productivity is the real bull case from here because you've got new tools. Generative AI is one of them, but you've also got automation, digitization, just the idea that companies can actually focus on getting efficient, which they have over the last couple of years. And that's one reason that margins for U.S. companies have remained relatively resilient, despite the fact that inflation has been all over the place over the last few years.
Well, you do seem quite optimistic on productivity and growth. Does that mean you see the Fed staying on the sidelines? If the economy's strong, why ease?
Absolutely. Yeah, exactly. Why ease if the economy is strong? And I think the idea that we need the Fed to ease in order for stocks to continue to move higher is also not necessary. If the Fed is on the sidelines because growth is strong, maybe we get a mini reflation cycle. As long as it's not enough to choke off demand, as long as it's not enough to really create a kind of a self-fulfilling slowdown, I think that's the positive case. The key risk is all of this uncertainty swirling around corporate America stymieing new projects. And I think that's something we're paying a lot more attention to because if you don't know what the tariff landscape is going to look like, it's really hard to deploy new capital. So I think that is a sort of a necessary, step in order to see more productivity, more capital unleashed, economic growth, et cetera.
All right, Savita Subramanian, head of US Equity and Quantitative Strategy at Bank of America. Thank you. Still to come later this hour, we're going to be live ahead of the Group of 20 finance ministers and central bank leaders gathering at Cape Town. And up next, we're going to bring you some of our conversation with the Governor of South Africa's Reserve Bank. Stay with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. South Africa's Reserve Bank Governor says global uncertainty around tariffs and trade has put a fresh question mark over inflation. Lesetja Kganyago spoke exclusively with Bloomberg ahead of the G20 meeting of finance ministers and central bank chiefs in Cape Town.
The decisions of the Fed are decisions of a major economy. We are a small open economy. Those decisions will affect the global economy and how they feed into our own decision-making process is through two channels. The first channel is the trade channel, right, which in normal circumstances it would just be that a slowdown in economic growth in the US leads to a decline in our own exports. By contrast, when the economy is doing well, our exports to the US would also do well. Enter tariffs. Once tariffs enter that space, to the extent that the US disinflationary process would slow down or even reverse, it might force policymakers there to reassess their position. Which way they assess it is another matter. The point here is that we would then be affected by a rise in global inflation and the extent that recalibration of policy leads to tightening of global financial conditions, capital flows, and a repricing of South African assets.
Do you think that will affect then foreign direct investment into South Africa if we do see it play out the way you just outlined there?
Foreign direct investments does not so much respond to monetary policy actions, but the trade policy actions would could actually affect foreign direct investment. How? At the moment, as a small open economy, what we do is we attract foreign direct investment that produces goods that we sell to other countries. So we have got American companies that have established shop in South Africa that are producing to export into the African continent, and some of them back into the United States. And if that is to affect them, then it would affect our FDI.
Really quick, Governor, it sounds like you're saying tariffs are the #1 risk that you're facing as a central bank governor in setting policy. Is that fair to say?
Well, tariffs are a risk to the global economy and to the global disinflation process. And what I'm saying is that a year ago, it was not something that we were worried about because it didn't exist. Now that it is here, we have got to take that. Into account.
That's South African Reserve Bank Governor Lesetja Kganyago speaking exclusively with Bloomberg's Jennifer Zabasaja. Let's take a look at some of the other stories that we're following. Donald Trump says he's starting a program to offer residency and a path to citizenship to any investors who pay $5 million. The US president says the scheme, dubbed the Gold Card, would launch in 2 weeks, adding that he did not believe he needed approval from Congress. The full scope of the plan and how it would be implemented was not immediately clear. The White House says the head of the US Department of Government Efficiency, the federal cost-cutting initiative associated with Elon Musk, is a little-known official named Amy Gleason. We understand Gleason, who is a healthcare technology executive, is serving as the acting administrator of Doge. The arrangement means that the Tesla billionaire does not hold the legal role of Doge head. All right, let's take a look at how US futures are tracking ahead of the open. Seeing quite a bit of positivity there for S&P futures, up about 1/3%. NASDAQ futures pointed higher as well. It was a pretty rough day for US tech stocks. The NASDAQ was weaker by more than 1%. They were poised for a bit of upside ahead of the open. Euro stock futures looking better by 0.4% as well. Still to come, we're going to be live to Abu Dhabi, where we will speak with Citi's Chief Client Officer, David Livingstone. Stay with us for that conversation. That's up next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Chinese tech stocks soar on AI optimism, rebounding after a sell-off. In contrast, Magnificent 7 tech stocks enter correction territory, dragged down by Tesla. Ukraine agrees with the US on a deal to develop its natural resources. This could ease tensions with President Trump and push his goal of a ceasefire with Russia. Also, finance ministers and central bankers gather in South Africa for the G20. We're live in Cape Town for an exclusive interview with the French Finance Minister, Eric Lombard. Well, it's just gone 8:30 a.m. Wednesday morning across the Emirates. It's 3:30 Wednesday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how futures are tracking in the US, looking a little bit positive after a fairly rough ride in the last session. We did see both the S&P and the NASDAQ in particular close lower on Wednesday, so poised for a rebound here. Elsewhere, we're seeing copper prices rally as well. This is an interesting story. President Trump signing an executive order directing the Commerce Department to explore possible tariffs on copper imports. Now, the US imports about 36% of its total requirements, and the biggest provider of those imports is, of course, China. So watch this space. We're seeing copper rallying pretty hard, and Chinese copper producers gaining in China as well. Elsewhere, Bitcoin slumps below $90,000. Crypto assets coming under a bit of pressure at the moment. We've seen Dogecoin down another 7% in the past 24 hours. Let's take a look at how US debt is tracking as well. We did see 10-year yields sliding to year-to-date lows, although they have rebounded a little bit in the Japan session. Treasury futures generally, though, have been pushing lower on a US budget blueprint, which paves the way for $4.5 trillion in tax cuts. Now, considering we're looking at potential savings in the US budget of about $2 trillion, the market's decided that could mean increased debt issuance. So we're seeing Treasury yields more broadly extending their slide. Let's check in on how markets in Asia are faring. Avril Hong is in Singapore. Avril.
Yeah, Paul, you talk about the rally in treasuries overnight, and that's seen a bit of a reversal ahead of the expected Fed speak. So I thought I'd also highlight how that's influencing the moves in the Japanese currency. A day ago, actually earlier today also, hitting roughly the highest level against the greenback since October, but it's since given up those gains. Despite this, I think the view in the market is a bullish one for the Japanese currency, and FX traders do seem to be warming up to the idea of a hawkish hold from the BOJ next month. Aside from this, the moves in the Japanese stock markets are also worth noting, because we've been seeing a lot of selling among the chip names as Trump sort of, ramps up the pressure among allies to help to restrict China's access to chips. Tokyo Electron has been seeing a slide for multiple sessions, and this level you're seeing lowest since November last year. Bloomberg Intelligence also recently put out a note that if you compare it to the likes of Advantis, another Japanese chip-related name, it could be at higher risk because its revenues, its sales, account from China for a larger portion of its overall revenue. So keep that in mind. Of course, that is the big drag we're seeing from Japanese benchmarks today. Paul.
All right, Avril Hong in Singapore. Thank you. Well, let's get to Abu Dhabi now, bring in our own Jemana Besetja. She's at Investopia for us. Jemana.
Good morning, Paul. Good to see you. And yes, we are at Investopia. This is a conference that's put together in conjunction with the UAE Minister of Economy. And the aim is to attract voices from all over the world, governments, some senior ministers that we will be talking to the next couple of days alongside investors. But for now, I'm very happy to say that Citi's Chief Client Officer, David Livingstone, joins me on the sidelines. Really good to have you with us.
Good morning.
Well, you travel around the world speaking to lots of different clients. So I think you're in a unique position just to tell us what the mood is. It feels as though, just listening to my colleagues talk about market price action, there is still a lot of uncertainty vis-a-vis geopolitics, the world alignment of geopolitics alongside uncertainty around tariffs. What are clients saying?
Clients are saying there's a lot to think about, there's a lot to absorb, and particularly since the turn of the year with the new US administration and the pace with which the Trump presidency is pursuing this American exceptionalism and America first. And everyone is having to react to that and think about, what does that mean for my business? What does it mean for my investment strategy if you're an institutional investor? You touched on some of the uncertainties. What are tariffs going to do? What are they going to do to inflation? Now, the only tariffs so far that had been imposed is the additional 10% on Chinese imports to the US. But there's been a sort of a little bit of an institutional pullback from the US since the turn of the year in terms of the strength of the dollar. It's not going much stronger than it currently is.
Yeah.
There's been some investment concern. The US consumer remains very strong. Maybe they're continuing to sort of spend ahead of the potential of increased inflation.
Yeah, it does feel like some of the shine has come out of the US exceptionalism trades that people were beginning to put on at the end of 2024. Yeah.
That's true, but I must say that the strategic capital, so companies and so on, continue, and this is a trend which started long before the beginning of 25, still see the US market as being the place that they need to have more exposure to, not just because of tariffs, but because of the growth rates in the market, the digital reforms that are happening, access to good energy prices, which is a distinctive thing compared with particularly Europe.
Yeah, one thing that I had lots of conversations about in Davos actually a couple of months ago, people were saying that this new administration would probably herald a reignition of capital markets, IPO activity and deal making. We're now at the end of February. Have you seen that in the US?
We've seen more positive trends in M&A, so strategic moves, and particularly given that there's likely to be a more accommodating regulatory stance in the United States in particular. So we're probably seeing it more on that side. Capital markets remain, I think, a little bit cautious and on pricing, and particularly given the elevated levels of particularly US markets. We need to remember the US is now 2/3 of the market capitalization of the globe. And so if you're anywhere in the world and you want to take a company public, you're going to look at the US market first, if you possibly can.
Yeah, and how is the mood on the ground with some of the clients that you're speaking to over here in this region in the Middle East? Obviously, again, a lot of changes in the last 12 months or so. What is the atmosphere here?
I'd say the atmosphere here is, I'd say, I was going to call it the second best, that's probably the wrong, but in the world, the Middle East stands out, and I'd say the UAE in particular stands out. We've seen our corporate clients in the last 2 years grow by more than 20% here in terms of the level of their activity, their investment. That's not just dollars, that's also people. I mean, one of the things which Abu Dhabi has done extremely well is bring talent. And we see this in ADGM with the very significant growth of fund managers and so on. And when you bring the talent and you bring the capital, of course, people will find the opportunities. And the diversification of the economies here in the UAE and in the Kingdom are really, really driving investment interest.
And when you look at overall Citi's client portfolio, do you expect the Middle East to continue to grow as a proportion of the global share?
Significantly.
Yeah.
As these economies continue to diversify, and in a very, very sophisticated, targeted way, investors and corporates, the multinational corporates, see this as an increased base for them, and not just for the Gulf, but also from the Gulf, and the connections with particularly India and the whole of
with the corridors.
Yes.
One of the themes that we've been discussing quite a lot on our show, obviously we cover the region, is the change in focus out of some of the key sovereign wealth funds in the region, and the fact that in the past this was a region where many fund managers and asset managers would come to collect or receive capital and then deploy elsewhere. Nowadays, there seems to be a bit more of a focus to invest and deploy domestically.
Yes.
Does that open up opportunities for you?
Of course it does. And we have engaged with all of the sovereign wealth funds, and if you take a Mubadala or a ADQ, very significant. And you touched on a point that it's not just their global investment, but it's also what they're doing here in the UAE, and Abu Dhabi in particular, but also in the near region. If you think of the investments that they've made in Egypt and in Turkey, and so on, really bolstering the hinterland around the Gulf and the returns that they're able to generate. And so yes, we engage very significantly in those discussions.
Yeah. Well, I expect I'll be seeing more of you then. David, thank you so much for the interview. That was David Livingstone, Citi's Chief Client Officer here at the Investopia conference. And stay tuned, we will have plenty more coming throughout the rest of the day. Paul.
All right, thanks, Jemana. That's Bloomberg's Jemana Lesetja for us there, live at Investopia in Abu Dhabi. Still to come, we're counting down to Nvidia's fourth quarter results, giving investors an update on whether the AI rally can continue. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Let's turn to South Africa now, where a group of 20 meeting finance ministers and central bank governors gathering in Cape Town. The group's increasingly under pressure from the actions of the US president, who's whipsawed financial markets with tariff threats on an almost daily basis since he returned to the White House last month. For more, Jennifer Zabasaja, our chief Africa correspondent, is in Johannesburg. She joins us now. So, Jennifer, what can we expect to hear from South African President Cyril Ramaphosa?
Right, Paul, good morning to you. Well, just behind me, President Ramaphosa will, in a few hours, give the opening address for the finance ministers and the central bank governors meeting. And the expectation is that we'll continue to hear him pushing forward this theme of solidarity, equality, and sustainability. But then also, he has to try and work in a lot of what we're seeing geopolitically and on the macro level into his address, and at least try to have a continuation of what we heard last week, which is that multilateralism needs to thrive. Although we did hear a number of leaders last week express their concerns about multilateralism. And also the expectation is that he will again try to amplify the issues and the concerns of the African and the global South that permeate a lot of these countries. Now, the concern, though, here, Paul, as we've been talking about for the past few days, is that the U.S. will not be represented at the highest level in terms of the Treasury Secretary. Scott Bessent has said he is dealing with domestic issues back in the U.S., so he will not be present. So many people here are wondering what can get done without the U.S. being here, at least on the table. They will be represented in terms of officials, but what does that mean for negotiations moving forward? So over the past few days, we had the deputy finance ministers and the deputy central bank governors meeting to iron out, as they say, technical details of some of the deliberations that the senior leaders are going to be speaking to today. But really, we'll wait to hear how President Ramaphosa is planning to continue to move his own agenda, or the country's own agenda, as the first African nation to hold this G20 presidency forward throughout the year, considering a number of headwinds that they're dealing with.
So who else are we going to hear from in the opening get-go?
Yeah, well, we're looking forward to speaking to a number of finance ministers actually throughout the day here. Namely, in the next hour, we'll talk to French Finance Minister Eric Lombard and a number of other European finance ministers and leaders, including the Treasury, the Chancellor of the Exchequer, Rachel Reeves, later today. And our question really is, with all of this discussion around defense spending potentially changing in Europe, many people are wondering, what does this mean then for foreign aid, especially because many of these governments are then going to have to adjust their own budgets. And we've already heard reports about a number of countries having to take some budget from the foreign aid that we have seen contributing significantly, of course, to the African continent and elsewhere, and potentially having to allocate that to their defense spending. So that is one of the big questions that we have here. We're also going to hear from Ireland's finance minister in a few hours, and so a lot of questions about what is happening outside of these walls really are going to be the focus for many of the leaders here today, and the questions that we're going to be asking them when they sit down with us.
All right, Jennifer Zabasajra, our Chief Africa correspondent there in Cape Town. Thank you. Well, that's the big one. Nvidia set to release its fourth quarter report, giving investors an update on whether AI spending is yielding results at a time when the world's biggest tech stocks have been in retreat. For more, let's bring in Bloomberg Intelligence Technology Senior Analyst Masahiro Wakasugi. So Masahiro, what are some of the key metrics we're going to be watching in Nvidia's earning results and the outlook as well? And how can we see whether DeepSeek is affecting AI demand or not?
Yes, so in the Nvidia results, we would like to see whether Nvidia will be able to keep the revenue growth every quarter going forward. So over the past few quarters, its revenue increased by around around $4 billion US every quarter. So we can say that the AI workload, which is $4 billion US equivalent, AI workload is increasing every quarter. So we would like to see if this pace can continue going forward. So maybe the Q4, which ended January, consensus is around $38 billion US, and the Q1 next quarter consensus is $42 billion US. So we would like to see the result as well as its guidance, and we can say that the growth pace is continuing or going forward.
So which companies in Asia might be affected by the results that we get tomorrow from Nvidia?
Yes, if we look at some names in our coverage, of course, SK Hynix is a very related company. So the SK Hynix supplies its high bandwidth memory for Nvidia, and especially for the most advanced GPU. So we'd like to see whether Nvidia's Blackwell, which is the most advanced GPU, Nvidia can accelerate the launch and ramp up of the Blackwell going forward or not. And of course, Samsung also supplies some GPU, and it's a bit more older generation. And Samsung may be saying that they may see some HBM revenue softness in the March quarter because of some kind of US restriction. So, and Nvidia also has around 15 to 20% revenue exposure to China. So we would like to see that if the Nvidia revenue for China could change going forward. And GPUs in related supply chain include some chip testers or maybe AI cooling systems. So that kind of product could be the another focus. So maybe including testers, Advantage is benefiting from the rapid penetration of the GPU, and Advantage tester could guarantee the quality of GPU chips. So maybe that would be the point.
All right, Bloomberg Intelligence Technology Senior Analyst Masahiro Wakasugi there. Still to come, Nigeria's GDP expands at the fastest pace in 3 years. We'll discuss what's driving growth for the West African nation. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Nigeria's economy grew at an annual 3.8% in the fourth quarter, and that's the fastest pace in 3 years, driven mainly by the services sector. Meanwhile, the West African nation's foreign reserves have fallen for 33 straight days amid central bank support for the naira. For more, Bloomberg's Ondero Aganga joins us from Kigali, Rwanda. So, Ondero, what are the details?
Hi, Paul. So if we start with the growth of the GDP, it's mainly attributed to services that grew by 5.37% year on year. And if we zoom in on that sector, financial services were the main driver, contributing nearly 57% to the aggregate GDP. And this accelerated the growth of non-oil sector to 3.96% from 3.37%. And you have Oxford Economics saying that this is signaling that Nigeria is gradually shifting away from its dependence on oil. If we look at oil sector, it also slowed down to 1.48% from 5.17% in the previous quarter, with production falling to 1.54 million barrels a day from 1.56 million barrels a day. Other sectors that recorded a slowdown include agriculture, 1.7% in the fourth quarter of 2024 from 2.1% in the fourth quarter of 2023. And a couple of factors are behind this. Adverse weather conditions. You also have insecurity in food-producing regions, and also legacy infrastructure issues. NBS estimates that growth for 2024 is 3.4%, and this is slightly higher than the projected 2.7%, but still lower than President Bola Ahmed Tinubu's target of 6%.
So what risk does the drop in foreign reserves pose for the naira?
Paul, there are concerns that the naira could be vulnerable all over again. Reserves have fallen by $2.2 billion after hitting a high of nearly $41 billion in January. And this is the longest slide since November of 2022, and now reserves have hit their lowest since October. And it's coinciding with the time where the naira is beginning to regain momentum against the dollar. It has gained about 2.6% since the end of the year, after losing nearly 70% of its value to the dollar in 2023 following devaluation. And we've seen the central bank work really hard to put the naira back on track. They've aggressively hiked rates to 27.5% before holding in their previous meeting. They've also cleared backlog and crack down on the black market and also speculators. So analysts are expecting that the central bank will continue defending the naira. But if the reserves continue to fall and then the central bank decides to ease rates, then we are likely to see investors getting spooked.
All right, Bloomberg's Ondera Oganga in Kigali, Rwanda. Thank you. Well, De Beers and Botswana's government to jointly fund a marketing campaign to resuscitate demand for natural diamonds. The 10-year deal also covers the sale of diamonds, the renewal of mining licenses and other capital commitments. The campaign seeks to improve demand for natural gems, which has been hit by slumping sales in China and lab-grown diamonds winning market share. The UK is to suspend most financial aid to Rwanda over its support for rebels seizing territory in neighbouring Democratic Republic of Congo. It says it will also coordinate with partners on potential sanctions, accusing Rwanda's soldiers of being involved in an unacceptable violation of DRC's sovereignty and territorial integrity. Rwanda described Britain's move as regrettable. Okay, we've got equity futures for the US in modestly positive territory after closing somewhat lower on the Tuesday session. Nasdaq futures also setting up for a rebound after tech stocks in particular took a bit of a beating in the last session in the US. Looking ahead to the open in Europe, futures indicate we're setting up for a modestly risk-on session. Stocks 50 futures currently better by about 0.5%. Okay, coming up in the next hour, stay tuned for our exclusive interview. We're going to be speaking with the French Finance Minister Eric Lombard at the G20. Stay with us. I'm Paul Allen in Sydney, and Jennifer Zabasaja is going to be joining us from Cape Town along with the French Finance Minister. That conversation up next. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Chinese tech stocks soar on AI optimism, rebounding after a sell-off. In contrast, Magnificent Seven tech stocks enter correction territory, dragged down by Tesla. Ukraine agrees with the U.S. on a deal to jointly develop its natural resources. This could ease tensions with President Trump and push his goal of a ceasefire with Russia. Plus, finance ministers and central bank governors gather here in South Africa for the G20. We're live in Cape Town for an exclusive interview with French Finance Minister Eric Lombard. It has just gone past 9 a.m. across the Emirates. I'm Jennifer Zabasaja in Cape Town, where it's just gone past 7 a.m.
And I'm Paul Allen in Sydney. It's just gone 4 p.m. Wednesday afternoon here. Welcome to the second hour of Horizons Middle East and Africa. Okay, we've got S&P futures in positive territory after a kind of a rough ride for U.S. equities. Copper is an asset that we're watching as well. President Trump's been busy with that black Sharpie again, signing another executive order, this time inviting the Commerce Department to explore the possibility of tariffs on copper imports. Now, according to Morgan Stanley, about 36% of the total demand for copper in the U.S. Comes from imports. And yes, you guessed it, China is the main provider of those. Now, if the president were to place tariffs on copper imports, that would obviously have implications for U.S. consumers. We're seeing copper prices rising at the moment. The oil price also picking up a little bit. We have seen crude sliding to the lowest this year, down about 5% this month, but it's pushing higher right now. Brent 73.20. We do have, of course, the usual macro factors weighing here. Weak consumption in China, although Morgan Stanley does see OPEC Plus rolling over production quotas at its next meeting. So unlikely more supply coming to market. Crypto assets feeling the pressure still. We've got Bitcoin now below 90,000, 88,562 right now. Now let's take a look at the Magnificent Seven, because as Jen mentioned in the introduction there, those stocks have slipped into correction territory, really dragging that index down. Tesla down 25% since the start of the year, and it was about this time yesterday that we brought you news of sales for Tesla in Europe cratering 45% last month on year. Also for the rest of that Magnificent Seven cohort, questions around the big spending that they've been doing on AI and how that is going to translate to profits. Although we're going to get another piece of the puzzle tomorrow when we get Nvidia earnings, which could turn things around. Anyway, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, I think we're also going to be watching out for that Nvidia earnings event, particularly for some of these Japanese, South Korean chip and tech names. But it's really interesting how increasingly you're getting the sense that Chinese tech names have decoupled from their US counterparts. I mean, there is, it seems, enough AI optimism to go around. Today, we're looking at the highest since late December on the Hang Seng Tech Gauge, and some of the drivers include DeepSeek reopening access to its core programming interface. This is, of course, a key service that is crucial for wider adoption of its hugely popular AI models. And then you have regulators said to have spoken to the likes of Alibaba and JD.com and to hear their views on fair competition. So maybe a lighter touch on the regulatory front. Worth noting as well that the Chinese president is said to have told his officials that, you should just keep calm even in the face of these domestic global uncertainties. So to some, this suggests a more measured approach when it comes to dealing with Trump and its policies. So as I say, today, Chinese tech doing really well, and that's helping the region's benchmarks to cap declines, that drag that you're seeing from the other names in Asia.
Keep calm and carry on. Quite a bit of advice right now. Thanks so much, Avril Hong in Singapore for us. Now, Ukraine has agreed with the U.S. on a deal to jointly develop its natural resources, potentially easing tensions with President Trump and his goal of a ceasefire with Russia. Sources say Ukrainian President Volodymyr Zelensky is planning to travel to the U.S. on Friday to seal the agreement. For more, let's bring in Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, thanks for being here. What could this deal potentially mean for a ceasefire in Ukraine?
Well, this is clearly a key step, but there's still a long way to go towards any kind of ceasefire. As we know, tensions between Trump and Zelensky had been bubbling up, with Trump even calling Zelensky a dictator. Now, this deal is something he has sought, and if it does go through, which it does appear to look like there will be some signing of the deal, then that creates incentives for Trump to start including Ukraine in the negotiating process. It incentivizes Trump to take into account Ukraine's priorities in any sort of ceasefire, as well as their security guarantees. However, there are two sides to any negotiation, and as for the Russian side, they have been clear that a quick ceasefire is not in their interest. They have rejected the idea of a truce while talks are ongoing. Russia is making battlefield gains. These are slow and costly, but they see it as strengthening their hand at the negotiating table, so they are reluctant to immediately agree to any kind of ceasefire. So there's still a lot of negotiating to go, but again, this is a key step and may bring Zelensky out of the cold for now.
And Greg, when it comes to the deal, just a few days ago, it seems like there were still some gaps between a few of the parties in terms of this minerals deal. What do we know, though, about the fine details that were agreed to?
Well, that's a great question. We know that this deal has been very important to Trump. He obviously sent his Treasury Secretary Scott Bessent to Kiev to lay out the original terms. There have been ups and downs, as you have noted. Kiev pushed back against the idea of a $500 billion fund. What we do know is that this deal is supposed to be sort of a way to repay Washington for the support that they have provided to Kiev through the course of the war. Originally, Trump talked a lot about rare earths, but there's no actual proven economically viable rare earths in Ukraine. But we do know that Ukraine does have other mineral resources, including critical minerals like titanium. They also have gas, port revenues. But this is supposed to be a way for Ukraine to provide repayment to Washington. Another key feature of this is that it could provide a way for Trump to seek buy-in from his supporters. One thing we know that it doesn't include, though, are the specific security guarantees that Zelensky has sought and that are likely to form the key factor in any kind of negotiations for a ceasefire.
Right, we'll look forward to the meeting between those two leaders. Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, thanks so much for joining us.
Well, stocks, treasuries, other assets have steadied as investors seek to move on from weak US economic data. In Asia, Hong Kong equities surging today, extending a rally that started last month. Joining us now is Cheuk Wan Fan, HSBC Global Private Banking and Wealth CIO. Cheuk, we've seen some US assets really suffering over the past few days, and US consumer confidence put a bit of a dent in prices in the last session. When do you see some of the factors that are driving this risk-off sentiment starting to turn around?
Yeah, I think the market are now starting to focus on the potential downside risk from some of the policy change, especially on tariff introduced by the new US administration, and compare with the risk reward in other parts of the global equity market. There have been investor repositioning happening. So we think the latest pullback in US equities is more a function of the investor repositioning and adjusting their overall risk exposure. And this also been reflected in the strong recovery of China equity market as the DeepSeek moment actually trigger some rotation trade, even within the global tech sector.
Yeah, you have upgraded Chinese equities to overweight. How much more upside do you see there relative to US equities and other markets as well?
Yeah. We do see a further upside potential for re-rating of China equity market because it has been driven by the policy pivot, which have been confirmed at the high-level symposium attended by Chinese President Xi Jinping with the technology leaders, and the key policy message actually confirmed a more supportive and friendlier regulatory environment for the private economy, and there have been strong focus on government policy support to drive further technological innovation. So with the catalyst of the DeepSeek breakthrough, we do expect to see an acceleration in AI adoption and commercialization in AI technology. So this will likely open up a new phase of capex spending and investment in AI infrastructure. So this will provide a new growth driver to support the earnings growth outlook of the China equity market. And on the other hand, we have the upcoming NPC next Wednesday. So based on the latest policy guidance from the Chinese government and with the latest remark from President Xi, we do expect to see more favorable policy initiative to focus on rebooting private consumption and tech investment in China. So over the past 2 days, the NPC Standing Committee also reviewed the private economy promotion law. So it looks like that there would be an expedited implementation of more supportive legislation to support the private economy.
What sorts of opportunities are your clients asking you about at the moment, and really how's their risk appetite, or are they looking more at havens right now?
Yeah, I think navigating the global uncertainties, including the trade risk, for Asian clients, they would look for more resilient and domestically driven investment opportunities. And this is also our key recommendation since the beginning of the year. We focus on the domestic leaders in the Asian market, especially with growth leader, which mainly drive their earnings and revenue growth from domestic demand. So this also reflects the demand from investors to look for diversification opportunities. Currently, we still maintain our overweight allocation to U.S. equities, but we suggest clients to diversify beyond just Magnificent Seven and the big tech, and they should actually capture opportunities from the tailwinds of policy priorities and tech innovation. So this would bring new opportunities beyond just mega tech. And with the proposed corporate tax cut and deregulation initiative in the US, we think there would be more domestically driven opportunities beyond big tech that will benefit from these favorable policy priorities. And in Asia, after our recent upgrade of China equities back to overweight, we think the AI value chain in China, together with the domestic consumption play, will likely deliver outperformance in the coming quarter due to the policy support. And outside China, we also recommend India and Singapore as attractive opportunities as they actually deliver a relative safe haven on the back of trade uncertainty, given India is a domestically driven market and Singapore actually provide a relatively defensive profile, given Singapore has a modest trade deficit against the US. So the market actually stand out as relatively defensive against the uncertainty surrounding tariff.
I'm interested in your views on Japan at the moment as well, because we've seen the yen strengthening, relatively speaking. It's got a 149 handle now. How's that informing your approach to Japan?
We favor Japanese equities mainly because of its more sustained reflation trend. So based on the latest macroeconomic data, this reflects continued improvement in consumption demand, and we also anticipate another year of robust wage growth. So this is going to support the domestic consumption sector. And with the BOJ increasing the policy rate, we actually expect 2 more 25 bip rate hike by the BOJ to reach 1% for the policy rate by Q1 next year. So this is going to improve the earnings outlook of the financial institutions in Japan. So overall, we think the reflation trend will bring sustained growth momentum in the underlying economy as well as corporate earnings performance.
All right, Cheuk Wan Fan, HSBC Global Private Banking and Wealth CIO. Thanks so much for joining us today. Still to come, we are live as G20 finance ministers and central bank leaders gather up in Cape Town. Up next, we're going to bring you some of our conversation with the Governor of South Africa's Reserve Bank. Stay with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja at the G20 Finance Ministers meeting in Cape Town. Now, South Africa's Reserve Bank Governor has discussed tariffs and the effect they could have on the global disinflation process. Lesetja Kganyago spoke exclusively with us before the start of the G20 meeting of finance ministers and central bank chiefs in Cape Town. Take a listen.
The decisions of the Fed are decisions of a major economy. We are a small open economy. Those decisions will affect the global economy, and how they feed into our own decision-making process is through 2 channels. The first channel is the trade channel, right, which in normal circumstances it would just be that a slowdown in economic growth in the US leads to a decline in our own exports. By contrast, when the economy is doing well, our exports to the US would also do well. Enter tariffs. Once tariffs enter that space, to the extent that the US disinflationary process would slow down or even reverse, it might force policymakers there to reassess their position. Which way they assess it is another matter. The point here is that we would then be affected by a rise in global inflation and the extent that recalibration of policy leads to tightening of global financial conditions, capital flows, and a repricing of South African assets.
Do you think that will affect then foreign direct investment into South Africa if we do see it play out the way you just outlined there?
Foreign direct investments does not so much respond to monetary policy actions, but the trade policy actions would could actually affect foreign direct investment. How? At the moment, as a small open economy, what we do is we attract foreign direct investment that produces goods that we sell to other countries. So we have got American companies that have established shop in South Africa that are producing to export into the African continent, and some of them back into the United States. And if that is to affect them, then it would affect our FDI.
Really quick, Governor, it sounds like you're saying tariffs are the #1 risk that you're facing as a central bank governor in setting policy. Is that fair to say?
Well, tariffs are a risk to the global economy and to the global disinflation process. And what I'm saying is that a year ago, it was not something that we were worried about because it didn't exist. Now that it is here, we have got to take that. Into account.
That was South African Reserve Bank Governor Lesetja Kganyago speaking with us here. Now, as we mentioned, finance ministers from the world's biggest economies are here in Cape Town for the G20 meetings. In Europe, leaders are grappling with the challenge of funding increased defense spending in the wake of American demands for the continent to pay more towards its own security. I'm very pleased to be joined now exclusively for a conversation with the finance minister of France, that is Eric Lombard. Eric, Minister, great to have you on set. So let's just start with, before these meetings here, you just returned from Washington to have a set of important meetings with the U.S. What were some of the key takeaways from that?
Well, good morning, Jennifer. Happy to be here, happy to be in Cape Town. Yes, we had talks with President Trump. I was with President Macron of France. We had talks with President Trump, with his government. I met Treasury Secretary Cheuk Wan Fan. It's important to talk. It's important to see how we can make progress. And we had two issues, of course, trade on one hand and Ukraine. And we are working, we want to have a ceasefire in Ukraine. I believe more and more all parties are looking for it. And that is one of the issues that we have discussed in Washington.
Was there progress on that front? And talk to us about some of the progress that was actually made.
I believe we made progress. We made progress because it seems to me, at least we are okay with President Trump. We want a ceasefire. We want that this ceasefire be guaranteed by European countries with an American backup. And on that, President Trump said he would agree. Of course, there's a long road ahead because ceasefire has to be discussed primarily between President Zelensky and President Putin. But Europe, America can help.
Did you get any guarantees from the U.S. on what they are willing to do as far as it goes with Ukraine? And then I want to talk about trade as well.
Well, in terms of Ukraine, we are starting technical discussion. There is a general agreement that in order to guarantee the ceasefire, it will be necessary to have European troops in Ukraine. And UK, Germany and France are already willing to do that, but other member states of the European Union will contribute as well. Those troops will arrive after the ceasefire in order to guarantee that ceasefire is respected. But if we want this ceasefire to be respected, we need a US backup. And I believe that Americans are agree to do that.
When it comes to trade, you said you met with Treasury Secretary Scott Bessent. Did you get any guarantees that France or the EU will not be targeted? What did you talk to him about?
We discussed all the issues, trade, tax, non-tariff barriers. we agreed to continue to talk, which is a step forward. We met for the first time. We met on a one-on-one meeting, and also, of course, Secretary Bessent participated to the meeting with the two heads of state, President Trump and President Macron. We'll meet again with the IMF meetings in Washington in April. We exchange sell numbers, and so we will discuss within OECD as far as taxes are concerned, and at the European Commission level for trade.
Do you think France is potentially, though, at risk of being, tariffs being put on France?
Tariffs are negotiated at the European level, and there are already tariffs that could increase in March on steel and aluminium. But we have to discuss all the issues because, the Americans want to apply reciprocal tariffs. That is a very wide issue. And so we have to discuss all issues, and we agreed to do that.
All right, that was Eric Lombard, the French finance minister, there with Jennifer Zabasajja. We've encountered a little technical problem there. We'll try and get back to Cape Town as soon as we can. In the meantime, we will take a look at how markets are tracking at the moment. We've got a little bit of weakness in crypto assets, which I've been mentioning. We are seeing a move downwards for Bitcoin. It's weaker by about, it's hovering around the 88,700 level. It's below the 90,000 level at least. We're looking ahead to the open, of course, in Europe shortly. Stocks futures positioning for a risk-on session, modestly so, better by about 2/3%, certainly following on from a fairly positive session for most Asia markets. Looks like tech stocks in the US are setting up for a rebound as well. Got NASDAQ futures better by about 0.5%. It was not a great session for the NASDAQ on Tuesday US time. We saw the Magnificent Seven slipping into correction as well. Tesla leading that basket lower, down about 25% now since the start of the year. And of course, it was around about this time yesterday that we told you that Tesla sales in Europe slumped 45% last month. We've got Nvidia earnings coming up as well. So that is definitely a big event to keep an eye on. It's likely to affect a number of other asset classes as well. A lot of questions, of course, over how AI spending is going to translate to profits. We've got yields little changed. The 10-year still at 4.32 there. We have seen yields sliding, though, around to year-to-date lows at the moment. Treasury futures also slipping lower on the US budget blueprint. Looks like there might be some more debt issuance on the way. All right, let's check in on how markets in Asia are faring. Avril Hong's keeping an eye on things in our Singapore studio. Avril.
Yeah, and keeping a close eye on Chinese tech names. I mean, I just wanted to highlight the size and scope in the Chinese tech rally and what that's meant for the broader gauges. You're looking at the highest since 2022 on the Hang Seng, highest since 2021 on the Hang Seng Tech. And today, it's the driver coming from DeepSeek, right? Reopening access to core programming interface. This is a key part of a wider adoption for its hugely popular AI models. You had regulators said to have spoken to the likes of Alibaba, JD.com on their thoughts on fair competition. So maybe also a lighter touch when it comes to regulation. Then you had reports as well that Huawei is looking to amp up its production capabilities when it comes to advanced AI chips. So you really get the sense that regardless of what Nvidia earnings look like later today, maybe Chinese tech stocks can go their own way. They can still do well. If you flip the board, I thought I'd illustrate that further for you. If you take a closer look at the AI darlings of the US and China, Baba and Nvidia, this chart, courtesy of MNI's Mark Cranfield, shows you how Alibaba has been outperforming Nvidia. So it'll be really interesting to see whether that thesis on US-China tech decoupling, how it gets tested when the earnings come in, Paul.
All right, Avril Hong in Singapore, thank you. Bank of America CEO Brian Moynihan thinks that over-regulation of lenders is the main reason why some customers are being shut out of the US banking system and not political bias. In a conversation for Bloomberg with David Rubenstein, Moynihan also spoke about working with various US administrations and changing those regulations.
There's a lot of burden upon the banking system to
both report suspicious activity reports and do a lot of analysis. And we have to close accounts, and we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area that comes up in this discussion is in the crypto area, where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right. And I think it opens a dialogue about how to get these regulations correct. At the end of the day, we're open for everybody. We serve millions and millions of Americans, trillions of transactions a year, and we'll continue to do so.
Okay, so when this administration was elected, there was a lot of, I would say, jubilation in the streets of the banking world. People thought that the banking regulation had been too tough under President Biden. Some people thought that regulation would be more amenable to banks. Has that turned out to be the case yet, or is it still too early to know? And is the banking community happy with the direction that the current administration is going, or you just don't know yet?
Well, so you have to sort of step back and say, the regulation of banking has always been true since our charter, our oldest part of a bank was from 1784. So we've been regulated from that day forward. If you think about the great financial crisis and Dodd-Frank and a lot of capital rules and liquidity rules and all that stuff came in, there was a reason for the world writ large to be really not happy with banks. And non-banks that became banks, Goldman Sachs, Morgan Stanley, Merrill, et cetera. So you could understand that. When you go fast forward through the 15 years hence, plus you go through the pandemic and the banking system stands up and stabilizes the economy. You go through the regional banking crisis, the banking system steps up and stabilizes it, and they keep adding capital and liquidity. You're sort of saying, wait a second. We are a source of strength. And by the way, the American banking industry is really a source of strength. So the pendulum kept just swinging, even though the reason why it had swung had stopped. And so our industry was saying, wait a second, why are we have 20% more cash added during the pandemic? The risk is the same. It's just by mathematical creep of calculations. Why are you saying we're going to limit your fees charged for a certain activity or deem an activity a loan when it wasn't a loan? And with hundreds of years of history saying an overdraft is not a loan, somebody just says, I want to make it a loan. And so this idea of the regulators sort of imposing new rules and regulations that Congress did not intend, actually, was kind of an interesting question.
You can watch more of that interview on the David Rubenstein Show. Peer-to-peer conversations airing March 12 in New York and on March 13 in Hong Kong. Well, Hamas says it's reached an agreement with Egyptian officials for more Palestinian prisoners to be freed by Israel. The Associated Press is also reporting that officials from Israel and Hamas have agreed to exchange the bodies of dead hostages for the release of 600 Palestinian prisoners. Israel's delayed their release since Saturday to protest what it says is the cruel treatment of hostages during their release by Hamas. Well, let's go to Jerusalem now, speak to Bloomberg's Dan Williams. So, Dan, does this mean that the truce expiring on Sunday is going to be extended?
Not necessarily. This would appear to be a resolution, but a very limited one in a crisis that could still cascade into renewed warfare. All we know for now is that the deal that was held up on Saturday will go ahead. So in a sense, we're catching up to a held up deal within the framework of the current truce, which is still due to expire this coming weekend. Now, according to Steve Witkoff, the President Trump's envoy to these talks, Israel has sent a delegation to renew talks, presumably about extending this stage of the truce or getting into the next stage of the truce. Israel had yet to confirm this. And indeed, Witkoff himself, who is expected in the region today, is now saying he may come next week, depending on the outcome of those direct talks between Israel, Arab mediators, and Hamas. So it would appear that there is very little clarity, not necessarily much place for optimism. What we have now is essentially a salvaging worth 2-3 days of the current truce framework.
Now, in terms of what happens if the ceasefire is enduring, what happens in Gaza, what's the role for Egypt here?
Well, that's an open question. Egypt borders the Gaza Strip, as does Israel. It has been very unhappy about President Trump's call on Egypt, as well as Jordan, to take in potentially hundreds of thousands of displaced Palestinians from the Gaza Strip as part of what Trump would see as a US-led makeover of that territory that would take 10 or 15 years. But nonetheless, Egypt is aware that it's dealing with the United States, it's dealing with the US ally Israel, and it appears to be trying to come up with its own plans, for example, reconstruction headed by Egypt in Gaza, with Gazans staying in situ. Interestingly enough, the Israeli opposition leader, Yair Lapid, was yesterday in Washington, D.C., making his own counter-proposal to the Israeli government, suggesting that Egypt essentially take stewardship for 8 years or more in the Gaza Strip. So not an annexation, not a return of Egypt formally into an open-ended control or rule of the Gaza Strip, but in exchange, the Egyptians would get debt forgiveness by the world, by the West. Interesting proposal that doesn't appear to have been much take-up from the Egyptians, so we'll see. I don't think there's any doubt that the Egyptians, along with other Arab powers, are trying to figure out a way out of this predicament, which would satisfy the demands of Israel and of the United States, while satisfying the demands of Palestinians and the Arab world not to see more suffering and displacement for the Gaza Strip, in a sense to be able to return it to a status quo ante of before the war, without Hamas having the same prominence or power that it had before it began this war.
Well, Israel, meanwhile, says it's carried out attacks on the southern outskirts of Damascus in Syria. What more do we know about that?
This is quite interesting because just 2 days ago, the Israeli Prime Minister Netanyahu made an announcement while addressing military cadets, saying that Israel now demands a demilitarized zone south of Damascus in southern Syria. That is the southern triangle of Syria that juts against the Israeli and the Jordanian borders. It was a bit unclear how Israel plans to enforce it. It does have troops inside southern Syria, but only a few kilometers in, not covering the entire territory. Well, now we know, according to Israel, it is now, these are its own words, enforcing the demilitarization policy with firepower, meaning Israeli airplanes, Israeli jets struck targets, what they said were caches of weaponry held by terrorists or by the new Syrian regime, which Israel essentially deems to be terrorists given its roots in al-Qaeda. And this is Israel's new policy of standoff enforcement of demilitarization, basically striking militarily at any entry of military forces, military assets into southern Syria that Israel believes could pose a threat to it on its northern border.
All right, Bloomberg's Dan Williams in Jerusalem. Thank you.
The South African President, Cyril Ramaphosa, is due to deliver opening remarks at the G20 finance ministers and central bank governors meeting here in just about an hour's time. The talks come as Donald Trump considers widespread tariffs that could reshape global supply chains. Let's bring in Brendan Murray, who leads Bloomberg's trade coverage. Brendan, great to have you. Is your expectation that we'll hear President Ramaphosa talk about trade and a lot of the trade tariffs and concerns around the current landscape right now?
Yeah, I think the mood in the room will very much be one of let's try to maintain a sense of economic cooperation, stability inside the room. Outside the room, there are all these geopolitical brush fires burning, from Trump's assault on free trade, to the divisions between the U.S. and Europe over Ukraine, to the simmering dispute in the Middle East. So there's going to be a sense of trying to maintain a consensus that the rich countries and poor countries work together to resolve these challenges, but there are definitely differences that will be hashed out largely in the hallways and side meetings, focusing on the divisions over trade and foreign aid.
But Brendan, can progress be made on any of these disputes, as you were mentioning, without some of the key leaders being here, or will this likely get kicked down the road until the rest of the meeting throughout the year?
That's right. Not much progress can be made given who's not here. The U.S. Treasury Secretary is sending a lower level deputy. The Canadians and the Mexican delegation, they're focused on trying to avoid getting into a trade war with their biggest trading partner in the U.S. Trump's deadline for 25% tariffs on Canada and Mexico is next Tuesday. So they're working back in Washington and their capitals to try to work out a deal before they're hit with those economically devastating tariffs.
So, Brendan, then what is your focus for you and the team? I imagine you're having to juggle a few different hats right now, considering what's happening outside of the country here. But what's your focus over the next day or so?
Yeah, the main focus for us and in the folks that we'll be talking to is to try to get a sense for how are they going to address these challenges. For the past couple of decades, trade has been the solution that rich and poor countries alike try to work together on to lift living standards and spread prosperity. With that now in jeopardy, what is the solution? So I think the main question for us is, where does a group like the G20 go from here as it tries to sort through these challenges without creating the economic headwinds that trade wars, tariffs, and those kinds of things could create?
Yeah, certainly, and we'll wait for President Ramaphosa's opening address in just a bit. Thanks so much to Bloomberg's Brendan Murray there for us for the update. Now, coming up, Angola's state oil company reaffirms plans to go public. We'll have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja at the G20 Finance Ministers and Central Bank Governors meeting in Cape Town. Angola's state oil firm Sonangol says it's still working towards an IPO as the country seeks to reduce the government's role in the economy. For more, let's bring in Bloomberg's Ndira Oganga, who is joining us from Kigali in Rwanda. So, Ndira, what is the timeline for this IPO? What have we learned?
Hi, Jen. So the timelines are not clear, but what we know so far is that the CEO says that they're taking the necessary steps internally in the company to make sure that this process begins. What they say they don't want is external pressure coming in and then pushing them into making mistakes that could have been avoided if they would have taken the time and been diligent with the process. We've also heard from the Minister of Oil, who says the goal remains the same, to dispose of at least 30% stake in the company to both international and local investors. And this IPO was initially scheduled for 2022, but it was delayed up until now because the country was slow in phasing out oil subsidies. According to the Ministry of Finance, oil subsidies accounted for $639 million in the second quarter of the year. Other challenges include Sonangol operating revenue falling to $10.5 billion in 2024 from $11.4 billion in 2023. And this can be attributed to a couple of things, the main one being the slowdown in crude oil prices in the international market. A barrel was selling for $80 in 2024 in comparison to $82 in 2023. And if you look at Sonangol, it's the largest and major contributor to the Angolan GDP. So it's in the best interest of the government for this IPO to go forth. First of all, because it increases transparency in the company. Second is that it will attract external investment, and that helps in the government backing off in its role and allowing it to operate as an independent entity.
And Ndira, you talk about the contributions then to the GDP. We did also hear from the IMF expressing a bit of concern about Angola's economy. What are they specifically worried about? Is it some of those points that you were just making there?
So the IMF is raising two parallels. First of all, they say that the economy has shown signs of improvement in 2024. We've seen a reduction in inflation and also a reduction in external debt. However, the risk remain heightened. First risk is Angola is highly exposed to oil price volatility because the economy is highly dependent on oil revenue. As I just mentioned earlier on, that Sonangol is one of the largest contributors to their GDP. Another challenge is debt vulnerabilities. Their debt servicing costs are really high, accounting for nearly 30% of non-oil revenue. And the IMF says that this is money that could go into other key sectors, healthcare, infrastructure, education. They're also raising concern that consolidation efforts have slowed down, saying that buffers that were built during the EFF program are being eroded by things like high capital expenditure, like challenges like fiscal slippage, and also a slowdown in phasing out oil subsidies. So the IMF is saying that moving forward, Angola needs to ramp up non-oil revenue. It needs to expand its tax base, particularly VAT, because the economy is largely informal. And most importantly, they need to work towards their growth. They're very modest in their projection, 3%, but also say that they're likely to see inflation easing in 2025.
VAT increase, not something many people want to hear. Bloomberg's Ndiro Oganga in Rwanda, Kigali, Rwanda, excuse me, Ndiro. Thanks so much for your time. Now, here's a few other stories in the region we are following. De Beers and Botswana's government are to jointly fund a marketing campaign to resuscitate demand for natural diamonds. The 10-year deal also covers the sale of diamonds, the renewal of mining licenses, and other capital commitments. The campaign seeks to improve demands for natural gems, which has been hit by slumping sales in China and lab-grown diamonds winning market share. The UK is to suspend most financial aid to Rwanda over its support for rebels seizing territory in the neighboring Democratic Republic of Congo. It says it will also coordinate with partners on potential sanctions, accusing Rwanda's soldiers of being involved in a, quote, unacceptable violation of DRC's sovereignty and territorial integrity. Rwanda described Britain's move as regrettable. And Saudi Arabia has sold a 1.5 billion euro debut green Eurobond after drawing in 7.25 billion euros of investor bids. This as the country seeks to fund its ambitious economic transformation plan. Bloomberg understands pricing for the 7-year note closed at a spread 115 basis points above the benchmark. Now, coming up, we look into drone warfare and how Taiwan is pushing to be a key production base. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen. More now from our special coverage into the drone arms race. It's a contest that stretches to supply chains, which right now are heavily skewed towards China. But there's a push by governments worldwide, including the US, to build new distribution channels. Our tech reporter Annabelle Drulers explains how Taiwan wants to become a key base for production.
Our sights are set on making Taiwan the Asia hub of UAV supply chains for global democracies.
It's a bold vision, but not one without challenges. Taiwan is racing to develop a domestic drone industry capable of defending itself from China. The island also wants to forge partnerships in unmanned aerial vehicles, or UAVs, with the US and its allies. AIDC is a government-backed aerospace company taking a leading role in establishing industry collaboration in Taiwan.
We need the defense localized, the first reason. And the second reason is that I think the drone developed trend is very quickly and a very huge demand.
Yet the island's drone inventory is still relatively small, particularly when compared to that of the Chinese military. This video, which circulated in 2022, shows Taiwanese soldiers throwing rocks at suspected Chinese UAVs on an outlying island. It painted a stark picture of the capability gap.
I think Taiwan might be need what we call the chip and software. The chip means we need for the communication chip, we need for the flight control chip, and we need to have the GPS chip. So those three kinds of chip, I think is something that we need to build up our technology by ourselves very quickly.
Building up drone stockpiles is no easy task, even if Taiwan is already recognized for its high-tech manufacturing expertise. Among the challenges is economic feasibility, as local UAV manufacturers need international buyers to build at scale and to cut costs. Then there's Taipei's diplomatic isolation imposed by Beijing, which constrains its ability to export advanced weaponry and could also make countries uneasy about supply disruptions in a potential China-Taiwan conflict.
I would worry about the security of that supply chain in the event of hostilities. How much can you rely on it?
And there's also pure business-to-business competition.
A lot of other nations are building these systems, right? I mean, one of them being China that may wish to supply them around the region in terms of kind of regional suppliers. And then Turkey, when you're looking at kind of more traditional US and NATO allies, Turkey has a massive drone industry. I mean, they're even building drone aircraft carriers. So yeah, there's competition out there, and yeah, they're not alone.
Annabelle Drawlers, Bloomberg News.
Now let's take a look at some of the other stories we're following. The UK plans to lift defence spending to 3% of GDP over the next decade, amid doubts over US support under President Trump. Prime Minister Keir Starmer outlined the plan and described it as the biggest sustained increase since the end of the Cold War. He says the government will pay for the initial hikes by cutting overseas development spending and won't raise taxes or borrow more. Donald Trump says he's starting a program to offer residency and a path to citizenship to investors who pay $5 million. The US president says the scheme, dubbed the Gold Card, would launch in 2 weeks, adding that he did not believe he needed approval from Congress. The full scope of the plan and how it would be implemented was not immediately clear. The White House says the head of the US Department of Government Efficiency, the federal cost-cutting initiative associated with Elon Musk, is a little-known official named Amy Gleason. We understand Gleason, who is a healthcare technology executive, is serving as the acting administrator of Doge. The arrangement means that the Tesla billionaire does not hold the legal role of Doge head. Jen.
Also, the White House says it's taking control of picking and choosing the group of reporters able to cover President Donald Trump in environments like the Oval Office and Air Force One. The decision came a day after a federal court declined a request by the Associated Press for a temporary restraining order to halt White House efforts to block them from the press pool. The White House Correspondents Association says the move tears at the independence of a free press. 2 more Wall Street banks are rolling back DEI programs. Bank of America is scrapping workplace representation targets and replacing references to diversity, joining peers in citing legal changes under the Trump administration. Citigroup, meanwhile, says it's ending its diversity, equity, and inclusion goals it set out less than 3 years ago.
Okay, we got oil rallying off year-to-date lows. Crude had been down about 5% this month on the usual suspects: trade tension, weak consumption in China. Morgan Stanley does see OPEC Plus rolling over production quotas at the next meeting. We're looking ahead to the open in Europe. Meanwhile, stocks futures gaining ground, now higher by about 0.7%. S&P futures also better, and Nasdaq futures setting up for a rebound as well. We saw tech stocks in the US selling off pretty hard, but it's going to be an interesting day for tech in the US with Nvidia earnings due before the open. All right, that is it for Horizons Middle East and Africa. I'm Paul Allen in Sydney with Jennifer Zabasaja in Cape Town. Stay with us for Daybreak Europe. This is Bloomberg.